looked at the data this morning, we were talking about how not only was the market off, they were off by tens of thousands. The highest estimate at 220,000 was more than 30,000 off of where we actually fell. How does this start to change the equation?
Yeah, I mean, this labor market report this morning was just undoubtedly strong. As you mentioned, much stronger than anyone on the Bloomberg consensus panel was suggesting. And I think that it just overall confirms that some of the weakness that we saw in the labor market reports over the summer was maybe more noise, and that overall things are going okay. Now we still think the economy is slowing. We've been saying slowing but not crashing, and I think certainly the markets and the Fed were very focused on potential downside risks as a result of the weaker labor market reports. And I think that this just, kind of confirms that things are okay in the U.S. economy. And so, those kind of recession risks, that should moderate, somewhat as a result of this.
Well, let's talk about what this means for the Federal Reserve. Of course, you've seen bond traders basically rip up the script and say, OK, another 50 basis point cut. It's not happening, at least not in November. And we just had a great interview, Mike McKee, of course, with Austin Goolsbee. And Mike asked Austin Goolsbee, if we were to get another report like this on November 1st, is it possible that the Fed could hold? And of course, Chicago Fed President Austin Goolsbee didn't quite answer that question. But what's your view?
Yeah, I mean, I think at this point, the broader thing that we've been very focused on is just that, again, this economy is looking more normal versus any time since the pandemic. Whatever kind of normal is, with the exception of monetary policy, which is elevated. And we think under a range of scenarios, there is still room for them to cut relative to where they are now. So our take on this is that, just some of the downside risks in the Fed funds rate, i.e., kind of those probabilities of other 50 basis point cuts, those I think have been, taken off the table or moderated more recently, and kind of a more gradual or sequence of 25 basis point rate cuts, seems very reasonable to us. This takes some of the urgency out of it, but doesn't take away the fact that monetary policy is still tight, and we have a more normal economy. So monetary policy still needs to be recalibrated to some extent.